There's flows into a Bitcoin ETF. There's more demand for Bitcoin, and it's a lot. I mean, Bitcoin ETFs are buying more than 100% of all the new supply.
Buy Bitcoin.
Buy Bitcoin.
Bitcoin.
Bitcoin is going to the moon, as we say. It's going to the moon.
So they're not only buying all the new supply that's being mined, but they're buying additional Bitcoin from other people who are being who are being encouraged to sell. Right. So there is, ETFs are an expression of that demand in the same way that you going out and buying it on a centralized exchange would be another expression of that demand. ETFs are just that in an institutional format. Yeah, I think the 4-year cycle is dead.
Market analysts say the 4-year crypto cycle is now officially over. Experts believe future trends will be driven by institutional inflows, regulations, and global macro factors.
I don't think it matters anymore. I think that because for a few reasons. One, what drove it in the past, whether you thought it was the halving driving it or whether you thought it was interest rate cycles, those are no longer that important, right? The halving is not that much supply anymore. It's much smaller than it was, let's say, in the 2016 halving. So it's a relatively small reduction in supply.
Hello everyone, how are you? This is your host Sunil Sharma from CoinGape, and welcome to yet another episode of Voice of Web3 powered by CoinGape Media. So guys, it has been definitely one of the largest bloodbath we can say in crypto market. A lot of questions to answer, a lot of hidden mysteries that are slowly coming up, that what led to that bloodbath of 10-10, right? And one of the things have been very clear, that there is a sudden interest in Wall Street about crypto assets, DATs, ETFs, everything just exploding right now. And we thought that we need someone who can help us to demystify all these things, somebody who can definitely help us to navigate the crypto waters right now, and who can help us to understand that what is going on right now, right? So guys, we have a special guest today. We have Matt Hougan, who is CIO Bitwise Asset Management, today with us. Matt Hougan, just for your understanding, is right now the Chief Investment Officer at Bitwise Asset Management. Bitwise Asset Management, guys, is the world's largest crypto index fund manager and a leading issuer of Bitcoin and Ethereum ETFs in the US. Matt is also widely regarded as one of the most influential voices when it comes to digital asset investing. He has spent over 2 decades shaping the future of index investing and one of the most renowned people when it comes to crypto on Wall Street. His research, portfolio strategy, influential engagements have an amazing track record. So guys, he's today with us, and we are just fortunate to have him on the podcast. Matt, welcome.
I'm so glad to be here. What an introduction. It's exciting to chat about what's going on in the crypto market with you.
It's just, your credentials and your background is as such that I can go on and, just keep on introducing you. So man, again, thanks a lot for being here.
No, I'm excited to be here. Thank you.
So Matt, there's a lot to discuss with you when it comes to how Wall Street is looking at crypto right now. Because to be frank, as a retail investor, it's very confusing. Nothing is working the way it used to work in the past cycles. It seems to be that everything is changing around us now, suddenly. So Matt, why don't you help us, to just understand that why this sudden interest in Wall Street for crypto assets? 5 years back, I remember everybody on Wall Street calling this a fraud. Everybody saying that this is not futuristic. And now suddenly we are seeing these DATs, ETFs, and everything just exploding. So Can you just help us understand that what is it that Wall Street is now looking in crypto that is different from the past?
Well, I think there are 3 things that have changed Wall Street's view of crypto. The first is it now has the ability to access it. I can't emphasize enough how important the launch of Bitcoin ETFs in the US, which was January 2024, was in changing Wall Street's attitudes towards crypto. Before those launched, Wall Street didn't have the ability to access crypto. It couldn't use traditional formats. It couldn't go on a DEX or a centralized exchange. It had to use a traditional financial product. And so it was on the outside looking in at this asset that was performing extremely well. And if you're watching something perform extremely well, but you can't access it, the natural response is to be skeptical. And so I think that was the first big change. The second big change is it went from something that institutions were afraid of for regulatory reasons to something that had strong regulatory backing. We've done a survey of institutional investors at Bitwise for 8 years and asked them, why don't you invest in crypto? And the number one answer for all 8 years that we did the survey was regulatory concerns. So back in the past White House administration under the Gary Gensler SEC, there was a lot of regulatory risk in allocating to crypto, and that's been removed. So it's become easier. It's become okay from a regulatory perspective. And then the other thing that changed is crypto got these new use cases that Wall Street is very comfortable with: stable coins and tokenization. It's easy for Wall Street to understand stable coins. It's easy for Wall Street to understand tokenization. It was not easy for them to understand Bitcoin, which is this, internet money that appeared from the sky. It was not easy for them to understand DeFi, which is hard to access and confusing on how it works. But it got these use cases that sort of played to its mentality, and all of a sudden they understood how crypto could be used in the world. And so they've gotten on board, and it's just going to accelerate from here. We're still in the early days. It's going up and to the right.
Yeah, I mean, the user experience definitely is way out of the box. I mean, you just send somebody USDT today utilizing maybe Ethereum blockchain or maybe Tron blockchain. You can make, sometimes you don't even know that who the other person is, yet you can all verify it. So, technology is definitely amazing. We all have seen it from the day one when we did our first transaction on chain. And I will definitely like to go with you in depth when it comes to stable coins and, of course, tokenization. It is the buzz of the market right now. But before that, there is it may sound naive to somebody as experienced as you, but for a retail investor like me, this is kind of very difficult to unwrap. And so when we hear something like, let's say, for example, that this week there was an inflow of, let's say, 500 million worth of Bitcoins to ETFs. So we know what it means when, let's say, somebody moves Bitcoin from exchange in and out of the exchanges, right? We know, okay, this may be bearish or bullish. So I wanted to know from you that when it comes to, let's say, buying or selling pressure on an asset like Bitcoin, what does these kind of headlines actually mean? That, okay, this is the inflow to BTF, Bitcoin ETF, and this is the outflow to Bitcoin ETF.
Yeah, 100%. Let me take the example of our ETF for Bitcoin, which is BITB. Every trading day, so Monday through Friday, except for holidays, once per day, we know how much money is coming into or out of the fund. So around 2 p.m. Eastern, we know that, say, we're getting $50 million into the fund. Mm-hmm. Our job as the asset manager is to go out at that point, and between 2 p.m. and 4 p.m., which is when you have to strike your net asset value, we have to create an agreement to buy $50 million of Bitcoin. And so we enter into an agreement to buy $50 million of Bitcoin at 4 p.m. At 4 p.m., that Bitcoin will be transferred from whoever's selling it to us to our custodian. And it is a direct impact on the market because someone has had to acquire that $50 million of Bitcoin for us. The same is true in reverse. If we find out that money is coming out of the fund, we have to go into the market and sell $50 million of Bitcoin. Doesn't matter if we want to, doesn't matter if we think the price is going up or down. We just find out from the market how much money is coming in or coming out, and we have to go out and buy that. Now, the price impact doesn't happen exactly at 4 because people can build up their position to sell it to us throughout the course of the day. But 100%, to be clear, when money comes into a Bitcoin ETF, that Bitcoin ETF is acquiring Bitcoin, typically from an institutional market maker who is accessing it from centralized exchanges or decentralized exchanges, but they're acquiring Bitcoin and putting it into cold storage. And then when it reverses, it comes right back out.
So, in a way, we are saying that in case if there is an inflow of Bitcoin, a Bitcoin ETF, inflow of funds to Bitcoin ETF, that essentially means there is more demand, I guess.
Yeah, that's exactly right. If there's flows into a Bitcoin ETF, there's more demand for Bitcoin, and it's a lot. Bitcoin ETFs are buying more than 100% of all the new supply. So they're not only buying all the new supply that's being mined, but they're buying additional Bitcoin from other people who are being who are being encouraged to sell, right? So there is, ETFs are an expression of that demand. In the same way that you going out and buying it on a centralized exchange would be another expression of that demand. ETFs are just that in an institutional format.
So, I mean, I just have a follow-up question with this one, because till now, everything seems so predictive. I mean, if somebody has been in Bitcoin and has seen 13-14 cycle, 16-17 cycle, 20-21 cycle, and we were kind of expecting the same this cycle as well. And something changed in January this year, right? When Trump actually came into power. And so one of the things that has changed is that there is so much of demand when it comes to Bitcoin or crypto from institutions. There is so much of demand from that side. You have been hearing these headlines day after day. And so it seems that something is changing structurally, fundamentally, when it comes to the core analysis of the price movement of these assets. And that's what I wanted to know from you, that do you see the past cycles kind of repeating themselves, or do you see something fundamentally changing here? And kind of we are right now in a phase of rewriting the whole book,
Yeah, I think the 4-year cycle is dead. I don't think it matters anymore. I think that because for a few reasons. One, what drove it in the past, whether you thought it was the halving driving it or whether you thought it was interest rate cycles, those are no longer that important, right? The halving is not that much supply anymore. It's much smaller than it was, let's say, in the 2016 halving. So it's a relatively small reduction in supply. Interest rates are going down. They went up in 2022. They went up in 2018. So the forces that created in the past, I no longer think are relevant. And then you have these long-term forces like institutional demand and regulatory progress that I think will push us up and to the right. Now, you may be wondering, the obvious question is, why is the market so volatile and up and down right now if we have this sustained institutional demand that I think will continue for multiple years? And the reason is there's a bit of a transition going on. Retail investors who sort of carried Bitcoin from $100 to $100,000 are taking profits, and they're selling to institutional investors who are the people who are going to carry Bitcoin from $100,000 to $1 million and beyond. So we're having this one-off sort of handoff from retail to institutional. That takes time. It's not that shocking that we've been hovering around $100,000 for about a year, in and out, up and down. That's a big round psychological number. I do think eventually we'll get past that, and one will start the move up towards $1 million Bitcoin, which is I ultimately think where we are going.
Cool. I mean, that would sound, amazing to a lot of ears seeing the Bitcoin price right now. But yeah, I mean, we are seeing a lot of Bitcoin OG wallets, as we call them, and a lot of Bitcoin large long-term holders. They are kind of now selling, and to somebody who is not on Wall Street, not well aware, may look like a selling event. But on the other side, we are seeing these lot of DATs coming into picture, Bitcoin and Solana, Ethereum, most of the top, blue chip crypto being absorbed in a way. So we are seeing that. And I mean, if you are saying, you are definitely a better judge of these movements. I mean, for the short term, it looks like that, it is kind of leading to a lot of volatility. It may scare away a lot of investors, especially retail investors. But ultimately, I think, and I wanted to ask you as well, I think this is kind of a mature movement in a way, right?
100%. It's a big maturity moment. And you can see that in the volatility, which is substantially lower than it was in previous years, right? It is a more mature asset, less volatile, more steady. It's no longer even as volatile as some of the Mag 7 stocks. It's like getting a little boring. But I do think this trend of institutional buying is still in its early days. I think maybe what the market is not understanding is that this buying that we've seen so far is just the first sort of foot in the sand. And there are a lot more feet coming behind that. I mean, typically when you invest in Bitcoin, you make a small investment and then you build your position over time. That's how many of us got into the market. We didn't buy all of our Bitcoin the first time we purchased. The same is true of these institutions. So far, what we've seen is a toe in the water from the institutions. and you're going to see that ratchet up year after year after year, which is why I'm so bullish long-term on where we're going.
So another asset other than Bitcoin, of course, is Ethereum. That seems to be the talk of the town always, and not for good reasons this time around. I mean, in terms of performance, I mean, definitely gold has kind of outpaced even crypto in most of the assets. But Ethereum seems to be that. I mean, Ethereum is raising a lot of questions at the moment, and since you yourself have an Ethereum ETF as well, I wanted to know from you, and that does the interest in Ethereum is very same as it is for Bitcoin? Because Bitcoin, we understand it's a store of value. We understand there is a supply, it's a limited supply part to it. We understand that it is the oldest one and of course the most mature one. But is the Ethereum demand also because of the same reasons, or are any other factors that are being compounded into it?
Yeah, I mean, what's really driving Ethereum demand is this interest in stablecoins and tokenization. The institutions that I speak with want exposure to stablecoins and tokenization. They might go and buy Circle, or they might go and buy Robinhood, or they might go and buy Coinbase. But the other thing they're doing is buying the blockchains that underpin that. So that's primarily Ethereum, Tron, Solana, right? Those are probably the big three in that space. There's some others that participate, but that's what's driving the interest in Ethereum. I would add the other thing that is for more crypto native people on the institutional side, because there are some institutional investors who have deeper crypto knowledge. They're starting to appreciate the pace of development on Ethereum, which is really accelerated this year, right? We're about to get the Fusaka upgrade. That's 2 major hard forks in a single year. So I think on the crypto native side, they're seeing a community, an organization that is accelerating on the Ethereum side. And then more broadly, they see it as the easiest way to play stablecoins and tokenization, and therefore a must-have for many portfolios. I think we're going to see significant demand for ETH from institutional investors in 2026.
Yeah, I mean, we are definitely seeing Bitmine kind of aggregating and accumulating ETH right now, and there are billions in loss right now, to be frank. I mean, and when it comes to Bitcoin, MicroStrategy seems to be the next potential victim, you know, where if in case Bitcoin falls below 70K, if it falls below sub 70K range. So, I mean, do you really think that Wall Street will be able to absorb this pressure if Bitcoin really falls? So the question that I'm trying to ask is that, so for a long time, Binance was, let's say, our single point of failure for crypto. We all knew that if in case Binance fails, it's done. It's done deal for crypto. The same seems to be very much true for MicroStrategy now, or Bitmine, or these DATs. So do you think them as a risk right now, or do you really see them being able to absorb this huge volatility that is coming with OGs selling on one side and Wall Street actually buying on the other side, you know?
Yeah, I think the place I would start is maybe the mistake crypto makes when it thinks about this institutional community is not imagining how large it is, right? So let me give you some context. The crypto market is a $3 trillion market.
Yep.
Global equities is about 115 trillion. Global bonds is something like 160 trillion. So on this one side of the ledger, you have $275 trillion that's invested in traditional financial assets. And on the other side, you have $3 trillion. It's literally 1/100th of the size. So if institutional demand ramps up as I expect, and they want to allocate 1 to 3% of their net assets into crypto, it's massively bigger than the entire size of the crypto market today. So if you think about something like MicroStrategy, which or Tom Lee's Bitmine, which owns 3% of ETH, you're talking about something that could buy 100% of ETH at current prices versus the potential of 3% sort of winding down to 2% or something. It's actually just very small on the scale. Now, in a short-term basis, it's really significant. What happens to the DATs is significant on a short-term basis. If they run into trouble and have to liquidate their holdings instantly, of course, the market won't absorb it overnight. But if you do believe this institutional community with like $300 trillion of money is coming into this $3 trillion asset in any meaningful size, then what's happening in 3% of that $3 trillion asset is like not long-term relevant. So again, it does matter in the short term. I actually don't think those large DATs will run into issues in the short term. I think the issues will be in the smaller DATs that own a fraction of the size of BitMine or of MicroStrategy. But long term, yes, institutions can absorb more than 100% of all the current holders of crypto if they wanted to sell, which I don't think they do, because it's just so large. I mean, it's just a really large pool of assets.
Mm-hmm. I mean, even today we saw Saylor continuing to buy Bitcoin. He made a purchase today as well.
Yeah, he made a purchase today. He set aside some cash to pay dividends on his preferred equity. The thing that people I think miss about Saylor is he previously traded at a discount to NAV, right? MicroStrategy has gone through periods of trading at a discount to NAV. It didn't have to sell all of its Bitcoin. No matter how you look at its debt structure today, there's no scenario within the next handful of years where MicroStrategy has to sell a significant amount of Bitcoin. The first bond it can't even be called until 2027. It has enough cash to pay its dividends on preferred for 2 years. So it's easy to think from a sort of 30,000 foot view that this company that's issuing debt and buying Bitcoin could run into issues. But if you actually look at the debt and you actually look at the preferred and you actually look at the capital stack, it's just not an issue until 2028 or 2029. And if Bitcoin is trading below where it is today in 2028 or 2029, it's already a failure, right? Like it's already a failure. So would MicroStrategy make it worse in that scenario? Yes, but if we're at $80,000 in 2029, something has gone wrong already. So I bet we would start to worry about what that thing was before we worry about MicroStrategy.
I mean, that's a very big endorsement, let's say, for Michael Saylor and MicroStrategy right here. I mean, see, as I said, crypto audience primarily is made out of retail people who are in the age group of, let's say, 25 to 30, 35. And Wall Street has always been very complicated for them. And that's one of the reasons why crypto was so easy to use, so easy to speculate on. And somehow somebody is now taking away that power from you to speculate, and to just, having that edge. And that is now, creating a panic I can see in my peers as well. And the particular information that you shared right now about MicroStrategy, this is not something which is even, I don't know, this is in media actually. Nobody has talked about this. Everybody just talking about that will MicroStrategy fail or not, and will Bitcoin follow it, But thanks a lot. I mean, thanks for sharing this. We will definitely make sure that this gets spread out.
I appreciate it.
Now, the next part where I wanted to get your thoughts is definitely about the ongoing bills, the ongoing regulations, the ongoing regulatory movements when it comes to US, because as we have seen historically in the past, whatever US does or follow, kind of every other nation tries to follow the same, right? So we can very confidently say that if something gets implemented in the US, it might as well be followed by the other countries as well. And when we talk about Genius Act regarding stable coins, or we talk about crypto market structure bill, is there any particular upcoming milestone in the form of regulations, or any upcoming particular bill or any particular, let's say, announcement looking at eagerly that we as retailers should also be looking out for?
Yeah, I think you should be paying attention to, it's a great question, paying attention to whether the market structure bill makes it through Congress within the next, let's call it 6 months. The US, of course, Congress operates on a 2-year election cycle. And as you get close to that election cycle, they really don't pass any legislation. So if we don't pass the crypto market structure bill within the next 6 months, you're not going to pass it under this Congress. And then whether you pass it at all will depend on what happens in the November 2026 elections. So you really want to see the crypto market structure bill start to move through committee, get out of committee, and get approved in the first, let's call it 4 or 5 months of 2026. Otherwise, you're talking about waiting to see what happens in the elections to see if we get that market structure bill. And so I actually think that could be one of the catalysts that, if it happens, sends crypto on an aggressive bull run. And if it doesn't happen, is a real wet blanket on the crypto market until we get closer to those elections and have a better view. I actually think it's one of the major catalysts in 2026 on whether we see this happen or not. If it doesn't happen, I do worry about the regulatory structure of the US going forward, because I don't know what will happen in those elections. So I'm watching this very closely. I think the outlook for this bill will in part determine whether 2026 is a great year or whether 2026 is another choppy year. And to be honest, the people we talk to says it has a good chance of happening, but not a guarantee, right? There are plenty of worlds where the politicians mess this up and we don't get this market structure bill. And if that happens, I think 2026 could be a challenging year.
Yeah, definitely the crypto pundits right now, they are quite divided. Some people are saying that, okay, Bitcoin is not going to break its bullish structure. 74, 73K is the bottom. This is where we kind of start reversing. And January 2026 onwards, we will see things kind of being more bullish about crypto. And then there is another class of pundits who are right now kind of saying that this is all done. And so we are going to, let's say, 50K or 55K. So as I said, the audience right now, mature or immature, retail or institution, is quite divided at the moment. And so I was hearing Raoul Paul recently, and he mentioned that he's kind of very bullish about 2026. He sees the debt refinancing cycle, as he calls it, in 2026 kicking in. And he sees that lot of that fund flowing back to Bitcoin, and then Bitcoin actually starting to go up. I wanted to know your views regarding this whole timeline when we say, because a lot of people are in panic mode, I'm telling you. Everybody was kind of just, enjoying the run, on October 26th, October 6th, I guess, it was 126K.
Right.
And October 7th, it dipped a bit, October 8th, and October 10th, within, I think, 1 hour. It was a mayhem. So people are right now quite worried, I would say, even the experienced traders, that is it actually the bear cycle has kicked in now and we are again going for a 3 or 4 year cycle before we see Bitcoin coming up? Or is it something momentary right now?
Yeah, I think it's a really good question. My gut says I'm with Raul in thinking that 2026 is going to be a very strong year. I agree from a macro perspective. Look, I think we're going to get significantly lower interest rates in the US. We're going to see quantitative tightening stop. I wouldn't be surprised to see the Trump administration try to boost the velocity of the economy into the midterms, since that's the defining issue here in the US. And even though you're getting mixed signals out of somewhere like Japan, I do see sort of more liquidity coming into the market globally as well. So you have macro conditions that are good. You have crypto specific conditions that are good. That's institutional interest in Bitcoin, institutional interest in stablecoins and tokenization. I think all of that points to a strong 2026, but it's not a guarantee. Again, to mention, the progress or failure on a regulatory side will have a significant impact. If the global economy goes into a tailspin, as some people think, that would be another significant impact. But if we get reasonable economic growth and we get progress on crypto regulation, then I think 2026 will be an absolutely spectacular year for crypto. I think it's coming into its own. It's getting institutional investment. There's real world adoption. If we get those negative events, then it could be a pullback. But I'm looking at it optimistically, looking at these prices as a good entry point for long-term investors. Could it go lower? Of course it could go lower. But as I look out a year, 2 years, 3 years, I see the price substantially higher from here.
So, one thing has been quite interesting for me. I personally, when I started investing, was your time horizon. Sometimes we call it long term, we call it short term. If I were to ask you that, what is the time horizon for a Bitcoin ETF actually, right? What sort of time horizons does a Bitcoin ETF work in? Is it a yearly something, or is it a 5-year horizon you're looking at right now?
Yeah, 10 years of flows. It'll be 10 years of inflows. Institutions move really slow. I know retail investors are used to making a decision and acting on a dime.
We are.
right? I mean, that's the beauty of being a retail investor. That's the speed. I'll give you an interesting fact. The average Bitwise client allocates to crypto after 8 meetings with us. And to add some context to that, many institutions only have quarterly meetings of their investment council. So 8 meetings of an investment council of a pension or endowment takes 2 years. And that's the average. Some need 12 meetings, some need 16 meetings, others need 4. But the average is like, so if you think about when the Bitcoin ETF launched, we're just now getting to the point where many institutions are ready to make a decision on Bitcoin. And you're seeing some of them come in, right? Harvard's endowment famously is allocated substantially to Bitcoin ETFs. They probably have done 8 quarterly meetings on it or something like that to get to that decision. It just moves at this glacial time frame. So, that's one of the reasons when people ask me what my time frame is for Bitcoin, it's like 10 years. Between now and 10 years, a lot of volatility, even the next 4 weeks, the next 6 months. I don't have a crystal ball on where it's going. I think it's going up in 2026, but I don't have a crystal ball. But as I span out 5 or 10 years, the crystal ball works a lot better from my perspective. And I think Bitcoin is going substantially higher.
Yeah, I mean, it's good to have clients at your back who are investing on a scale which actually requires 3 or 4 years minimum to even speak of some returns, right?
Right.
And I'm speaking of people actually, who don't have that much of money, who are basically, let's say, and who are not even full-time traders, kind of, not even full-time investors. These are people who are working part-time and then trying to kind of invest a part of their savings to crypto. And that's why you see so much of reaction and sentiment from them. And it's good to see. I mean, crypto Twitter is definitely always on heat. You can anytime go there. So another topic, Matt, that is again very much in hype, and I'm sure that you will again help us to reveal a lot of things there, is tokenization, of course, right? Just like there were ICOs, then there were STOs, and then there were NFTs. Now there is stable coins and tokenization, right? And it seems like everybody, private or government, kind of wants to launch a stable coin. They see it as a very big vehicle for, let's say, next economic growth. We see a lot of tokenization updates coming from big funds like BlackRock and other companies as well. So my first question to you was that when we talk about anything in crypto, we have understood after experience, liquidity is very key. So if I'm, let's say, trying to launch a token, listing on exchange like Binance or Coinbase is very important to me because I know it will give me liquidity from day one. So it becomes a very big deal for me. Now, when it comes to tokenization, essentially we are again creating a token here, right? And I don't see that much of liquidity yet, where actually you can see a lot of buying and selling taking place for these tokens. So what's happening here? Why institutions are so much eager to tokenize everything?
They're eager to tokenize everything because if you're inside traditional finance and you understand how securities move, it is so complex and so sclerotic that it is very easy to imagine something better. It's worth noting that stocks in the US settle T+1, which means if you buy a stock, you don't actually receive it until tomorrow. Think about for a second how crazy that is. Imagine if your emails settled T+1. Like if you sent an email and you got it tomorrow. That's what happens in our equity markets, like the greatest equity market in the world, right? The United States, full of technology, 50+% of the world's equities, takes a full day to settle. If you buy it on a Friday, it settles on a Monday. I mean, that's so insane. So the reason Wall Street is so excited about tokenization is that they are close enough to the inner workings of how it actually happens that they know just how painful it is. That is obscured, for what it's worth, to the retail investor. When you go to Schwab or your brokerage account and you buy a stock, it feels like you get it instantly. But what you actually get is like a promise, and you really get it a few days later at high cost. So that's the reason they are so excited. You're absolutely right that it will take a long time for the liquidity in tokenized assets to come anything like what we see in the traditional market, right? You're not, from a user's perspective, the tokenized market is likely to be worse on metrics like liquidity and trading costs for a period of time. You may wonder then, how will it get any traction? The answer to that is it will get traction in areas where the traditional market doesn't work. So an example is foreign investors buying US stocks is something that's hard to do in the traditional format, easy to do in a tokenized format. So even if their spreads are wider and the liquidity is less, they will use that because it's the only way. Another example is funds that settle on weekends. BlackRock launched this money market fund, BITL, and it has multiple billions of dollars in assets. That's because hedge funds can use it to post collateral on Saturday or Sunday when the traditional rails are closed. And that's a killer use case. Is it as good on Monday at 1 p.m. as a typical money market fund? Not on most metrics, right? Not on core liquidity. But is it as good or better on Saturday at 11 p.m.? It's infinitely better because the other system is closed. So you're going to see this tokenized market build up in areas that aren't served by the traditional market and then eventually take over the traditional market. But you're going to see a lot of, like every Wall Street firm is going to be building in this space because the existing system is just so bad. It's really, really bad.
Yeah, I mean, so I was recently having a discussion with somebody and we were discussing with a fund and we asked them that, what is your preference? Would you want equity or would you want a token? And they didn't even take, minutes. They just said in seconds, we would rather take a token. And I was like, okay, hey guys, equity is actually something which is compliant and everything. Why go for a token? No, they said we want a token. And that's where I got a taste that, okay, this is something that is actually very key to Wall Street, that how and where the exit is and when it can be done actually. And token actually gives you access to a very easy exit once it is listed on an exchange or once it is listed actually somewhere on chain, maybe on DEXs maybe. So yeah, that's what I got understood. And we do have a firm in Dubai where actually we are right now helping a lot of clients to tokenize their stuff. And Maritime has come up with it, as you rightly saying that on Wall Street, everybody right now is trying to tokenize one or the other thing. And we are also right now quite, let's say, overwhelmed by the demand that is coming when it comes to something illiquid as Maritime, ships, yachts, and these kind of things. And we are again trying to say everything that this has to make some sense. Your asset has to make some sense. It has to give something economic to the investor again, right? But I think it's again the FOMO market that is there. So my next question, Matt, is again that when it comes to tokenization, do you also see ETFs for these tokenized assets in the coming days? Do you really see that, okay, we will see tokenized assets actually comprising and coming out on these exchanges as an ETF?
That's an interesting question. I'm more confident that we'll see sort of tokenized ETFs offering broad-based exposure. We may call them vaults. That's sort of like the current wording for those things. So I'm confident of that. Will ETFs themselves own tokenized assets? I don't know. It really depends on how regulatory progress pursues. So not anytime soon is what I would say. Because there are various specific rules in the ETF structure that would make that difficult and challenging, particularly at large amounts of the ETF. Over time, 3 to 5 years out, maybe if that's the direction that the market goes, if that becomes a mainstream way of accessing it, then I could see it happening. But there's a lot of regulatory wood to chop. This is one area where people's interest right now exceeds the size of the market and its ability to penetrate. People are very excited about the possibilities of tokenization, but there are lots of hurdles for traditional investors to interact with them. That will be true for a few more years. We still have some big regulatory efforts to figure out. But the good news is there are a lot of people focused on trying to figure these out. So long term, yes. Short term, probably not. Again, I think much of the tokenized use short term will be solving very specific problems that the existing system doesn't solve. I think that's where you're going to see most of the pickup.
So, when it comes to tokenization, what we are seeing is a lot of buckets being created. So for example, an agency tokenizing assets for HNIs or maybe for family businesses, they right now sit on this tremendous bucket, including maritime assets, real estate, art, and everything. So it does make sense on paper that it is looking much like an ETF now, right? And who actually takes it up and releases it,
Yeah. I think long term for sure. And again, I think you'll get ETF like versions in the tokenized world where you don't have those same regulatory restrictions, but you're putting those assets together into a useful package. But again, we do have a lot of regulatory wood to chop. We're just getting there on stable coins, right? Even the Genius Act doesn't go into effect until January of 2027. So we're still 13 months from having the Genius Act in effect. We're sort of building for that future now. Something like tokenization, we have to write the rules. They have to be put in place. The systems have to adopt to them. Then I think you'll see that really take off. But it will look. I'm very excited about it, but it will take significant time to sort of cross over into mainstream.
Yeah, I mean, yeah, definitely. But there is a lot of buzz. There is a lot of hype around this, and right now it seems to be that every token in the coming days will have this as their main narrative.
For sure.
Now, Matt, you have wide experience with all these crypto assets now. I mean, Solana, Ethereum, Bitcoin. One question that comes to mind is that when it comes to ETF issuers, do they really have a theme to it? I mean, does saying that Solana is better than Ethereum or Bitcoin as an ETF make sense? Or do you see that all these are just different mechanisms? Or is there a preference for ETF issuers in the coming days?
Yeah, I think as an ETF issuer, what you want to do is launch ETFs on high quality assets where there are strong opinions. What you don't want to do is launch on an asset which nobody really cares about. Like an asset where everyone's like, kind of interesting. No one buys that. You'd rather launch on an asset like XRP that a lot of people hate and some people like, because the people that like it will drive the interest in it. That's why the XRP ETFs have attracted a lot of interest, right? There are plenty of people who dislike XRP. Doesn't matter. It doesn't even matter if the average person dislikes an asset. What you care about is, are there people who like an asset? So that's the first thing you look for, is like a level of a high quality project with a reasonable shot at success, for which there are people who have strong opinions about it. That is an area to focus on. And then you want to avoid assets that have, blow up risk, right? Like one thing we're very proud of at Bitwise is we never added Luna to our index fund. We identified the risk in Luna, screened it out of the index, and never included it. You wouldn't want to have launched an ETF on Luna. So you need to avoid these chains that have significant sort of blow up risk. I think that can be harmful reputationally. But you want to focus on the chains that have, working blockchains, reasonable token economics, a reasonable prospect, and a highly committed community that's very interested in that space. And I think you'll see those ETFs do exceptionally well.
Yeah. So, Matt, is there any particular Bitcoin price where you will say that, okay, I'm now bearish? What's your target?
Yeah, depends on your time frame.
Where is Matt's stop loss?
I think the fundamentals of Bitcoin are just really sound. So as long as you're sized appropriately, look, it's not 100% of my personal portfolio. It's a significant fraction. As long as you're sized appropriately, no, I'm just existentially bullish. I think it's eventually going up over time. If it fell, generally speaking, I would buy more. I'm a pretty disciplined, systematic investor from that perspective. I think the long-term value of Bitcoin is measured, north of $1 million. I think that's the direction we're going. If there were an existential change to the technology or an existential regulatory threat, like all governments globally banned it, I think that would make it very difficult to invest in the short term. But absent those sorts of risks, I think the long-term trajectory as the first scarce digital asset, as the most liquid digital asset, as a new form of digital money, I think that's sort of an intact theme, and it's just how long does it take to get to where we're going?
Yeah. So Matt, there is one question we ask to every guest, and that is kind of a question that every retail investor has always in mind. So if Matt, you had $1,000 today, how would you invest and allocate it to? What sort of asset would you buy?
Yeah. Well, I'll give one answer and then you can push me for a more complex answer if you want. I would buy a basket of the top 10 crypto assets. Look, my highest conviction bet is that crypto will be more important in 10 years than it is today. I have much less conviction on whether ETH or Solana will win. And so my solution to that is to buy both ETH and Solana and Bitcoin and Chainlink and a handful of other assets, because I'm excited about all those assets and I just want to own that market. So that would be, that's what I would do if I had $1,000 to invest. I would just own the top 10 crypto assets about at their market cap weight and put them in a box and open that box up in 10 years and see if I'm wealthy.
So there has been a lot of themes in crypto. Is there any particular theme you're looking at? I mean, so recently we even saw the perpetual DEXs actually rising tremendously in volume. We saw Hyperliquid, we saw Binance launching Aster, we saw Coinbase launching their own perpetual DEX. So this seems to be a new trend where we are actually seeing a lot of volume being traded on these DEXs now as compared to centralized exchanges.
Yeah.
So do you also see there, some kind of play there now?
I actually think they're like 7 examples exactly like that. Here's a meta thesis on crypto. For a long time, the only thing you could talk about was Bitcoin. The only thing we were sure about was digital gold. Everything else was like a speculative bubble. And now we have 2 more things that we're pretty sure about: stable coins and tokenization. So we've gone from a Bitcoin world to a Bitcoin, stablecoins, and tokenization world. The weird thing to me about the market is that now everyone assumes, well, that's it. It's just Bitcoin, stablecoins, and tokenization. That's as wrong as backing up 4 years ago and saying it's just Bitcoin, right? That was wrong. Now it's Bitcoin, stablecoin. My view is that in the next 3 years, it's going to be like 10 things. So what are some of those 10 things? I definitely think DEXs are ascendant and are only getting better. And the economics of the tokens associated with DEXs are only getting better. So I'm very bullish on that. I'm also bullish on lending protocols like Aave or tokenization protocols like Ondo. I think those are only getting better. I'm bullish on prediction markets. I think that is another big theme. I'm bullish on digital identity. I can't imagine a world where crypto is really important and digital identity is not a central part of the market. I think that's a really big deal. I think ICOs will be reborn. I think DePIN will actually come into its own over the next 4 to 5 years. So I think as we span out to 5 years from now, it will be Bitcoin, stablecoins, tokenization, prediction markets, DEXs, lending protocols, decentralized identity, DePIN, and a couple other categories that I'm not even thinking about. So I sort of think the market has gotten it wrong in thinking we've exhausted the killer apps. Just like if you went back to the early days of the internet and you said the internet is search and it's Amazon and it's email, and that was it. And then you overlooked social media and business to business and AI and streaming video and Zoom and podcasts and YouTube, and you missed all of those things. I think the same thing is true in crypto. We're like too narrowly focused on these 3 things. It's actually 10 or 20 things, and I'm bullish on all of those things. In the near term, yes, bullish on DEXs, bullish on oracles. I think there's no world in which stablecoins and tokenization are huge where oracles aren't absolutely monstrous. I think there's no world in which prediction markets aren't huge, where oracles aren't really significant. So I'm very bullish in that space. But I'm really bullish on like these 10 things. I think it's a much bigger opportunity set than most people think.
Yeah. I mean, I tend to look at things in the sense of an user experience. If the user experience for the next stage, if let's say 4 or times better than the earlier one, then people will naturally move on to it. So right now, for example, making a transaction on a stable coin is far more superior user experience as compared to me going to my bank and asking them to send somebody money. I mean, it definitely looks that, and Gen Z, it's quite Gen Z kind of, it's Gen Z kind of is adopting it really quick. So recently a report came out, and I mean, we were surprised to see that in countries like India and Asia, and particularly in Asia, Gen Z and people in the age group of 25 to 30 are actually the largest adopter of this technology. They are making these transactions actually. So, I mean, we hope that you are right. We hope that you're spot on, and we all are in the same boat.
Absolutely. Absolutely. We will get there.
So, Matt, one last question, and then we will wrap up the podcast. What is Matt's prediction for Bitcoin in 2025?
2025 or 35?
Yeah.
This next few weeks. Look, I think we're going to post a positive year this year. Bitcoin's down 7% this year. I think we end the year up. I think people will stop selling, trying to front run the 4-year cycle, and liquidity will start improving basically today, December 1st, and expectations for interest rates will fall. And I think we'll end the year up. And then to add on to that, I think we'll end the year up in 2026 as well, which will put a dagger through the heart of the 4-year cycle, and we won't have to talk about it anymore. So there you go.
So Matt, thanks a lot. I mean, a few chats we did were quite eye-opener for me as a retail investor, and I'm sure it will help a lot of people because most of these facts are not known. Nobody wants to talk about them. But thanks a lot. You just, helped us a lot. I mean, helped the retail investors a lot.
Thank you for having me.
We hope, I mean, for us, it's always learning to get to somebody like you on the podcast. And as I said, most of our audience is not very mature. There's still people who started their investing journey with Bitcoin. So for them, whatever is happening now is quite, let's say, fascinating, as well as, panicking as well. So thanks a lot. And I'm sure that people who are hearing to this podcast will definitely take out very good points, and it will help them to invest better. So thanks a lot, Matt. Thanks for coming on the podcast.
Thank you for having me. It was great to be here.